Well, we have less than a month before taxes are due. Alan Rowell from the Accounting Place is here as we talk capital gains this morning. Good morning. How are you?
I'm doing great. How are you doing today, Bob?
Good, good. So lots of talk in the news about real estate and taxation of principal residences. And of course, when the government asked for put a requirement about reporting sales, that raised a lot of eyebrows. So talk about taxation of residences and how you have to define a principal residence, right?
Well, yeah, it's taxation or the reporting of the principal residence sales has been around for a while now, and there was talk about taxation of it when it first started, and then now because of the budgets and things that are happening on the 19th, there's talk about it again. Basic story to it is, as of right now, anyone that owns a principal residence is tax exempt. Okay, the sale of the property is reported on the personal tax return. The details do go on it, but that's more of a trace the money thing as opposed to an actual taxation. There's no tax calculated on it at all. This starts to get a little bit more complicated if they're in the household. There's two principal residents.
Right.
You know, for example, I could have a house in the city and a cottage in Muskoka or something like that. I sell one of them. Now, one of the few times that we can do some actual reverse tax planning, one of them I have to decide is my principal residence and one of them is not. So it's just a matter of calculating out what the gains are on both properties and then choosing the lowest one. Where it really starts to get complicated, and this is happening a little bit now, is when you decide to buy another house and rent out the one that you've been living in for the last 5 or 10 years. So now you have what they call a change in use. So as soon as you start using the property as an income producing property, you lose that exemption status. So now you got to decide what it is for the 5 or 10 years while you may have owned two properties, added a third property that no longer qualifies, and you really get into a juggling game as to which property becomes the principal residence at what time. Quite the calculation, actually.
Well, yeah, I guess it would get complicated. And like, what if you had a property as an Airbnb for a period of time, but then did not, and it wasn't generating revenue? Like, that has to be factored in?
That has to get factored into too, and because what ends up happening is the government classes Airbnbs very similar to a hotel, for example. Is you're renting out short term, you got property income, passive income on it, therefore it doesn't qualify as a principal residence. It gets into a whole mess of calculations. Right now, the government has those calculations based on yearly use. I can see that changing somewhere along the line as they start to get more information and be able to trace these Airbnbs a little better as they go forward.
Okay, so for those that have a second property and define, and it's established capital gains do apply. So what happens next?
Well, and that comes up to the next question. It's always big. It's big in the news right now because of the budget. Right now, what ends up happening is any capital gains are taxed at 50% of the gain. So what that means is you pay your marginal tax rate on 1/2 of the amount of profit that you made. So I buy a stock for $1,000. I sell it for $1,500. I've made $500 on it. I pay tax on $250. Now, over the years since 1972, when the capital gains tax came into play, those numbers have changed, and this is what's being talked about right now. Is in the upcoming budget, is instead of it being 50%, maybe it's going to 75%. Maybe it's going to 2/3, 66.67%. We've had both those rates over the years. Has an awful impact as far as taxes go, because using the same example, instead of paying paying tax on $250 on my $500 gain, I would now pay tax on up to $375. And these are both major issues that are bouncing around the news right now with regards to the upcoming budget.
Yeah, that would be a significant bump. Hey, I wish we had more time, but you know what? We're going to link up the Accounting Place at chh.com for more answers and as we approach the deadline. Thank you so much, Alan Rowell.
That'd be great. Have a great day, guys.
You too. See ya.